Hello students, welcome to financial accounting class. In the previous class, we were dealing with one problem wherein we had to calculate abnormal loss and value of closing stock. In today's class, we will be dealing with yet another problem wherein the problem goes in this way. Philips company consigned 200 pocket radios to Hubli Electronics, each costing rupees 400. So pay attention here. Hubli company consigned 200 pocket radios to Hubli Electronics, each costing rupees 400. So Philips company is consignor and Hubli Electronics is consignee, because Philips company is Philips company consigned. It means they have sent the goods. Okay, 200 pocket radios to Hubli Electronics, at which at each radio was costing rupees 400. Okay, next, consignor paid. Consignor here means Philips company. Okay, Philips company, that is the consignor, paid rupees 1400 for freight, carriage and insurance, rupees 2000. Okay, freight and carriage is how much? 1400, and insurance is 2000 for sending the goods, and received an advance for rupees 20,000 by check against the consignment. Now what does this say? That is, Philips company has paid 1400 for freight and carriage, and rupees 2000 for insurance, okay, for sending the goods. They also received an advance of 20,000 by check against the consignment. So who has paid this 20,000? It is Hubli Electronics, that is the consignee. Okay, they have paid 20,000 for receiving the goods in advance. Okay, next, Hubli Electronics, that is the consignee. Hubli Electronics incurred rupees 2600 for octroi and carriage while taking delivery of the goods. This is nothing but the expenses incurred by Hubli Electronics, that is the consignee, and spent rupees 800 for warehouse rent and 1600 on advertisement. So Hubli Electronics has incurred an expenses of rupees 2600 on octroi and 800 rupees on warehouse rent and 1600 on advertisement. Okay, next, they also reported that they sold 160 pocket radios at rupees 600 each. So they have said that is Hubli Electronics has made sales of 160 pocket radios or at rupees 600 each. Look here, how much was the goods that were being sent? 200. Out of 200, they have sold 160 radios. 200 units were being sold and the amount was 600. But at what price is the consignee selling it? That is Hubli Electronics selling it at rupees 600. So 200 is the profit. Okay, so they have sold 160 pocket radios at rupees 600 each. Hubli Electronics are entitled for commission of 5% on the sales. So since they have made the sales, they are getting 5% commission on sales. Prepare necessary ledger accounts in the books of both the parties. Now you need to prepare the journal, the ledger in both the parties, in the books of both the parties. Now, do you remember this, what we have learnt in the previous class, that is journal entries in the books of consignor as well as consignee. Okay, just take off those journal entries. Okay, and also remember these accounts what we had learnt. Okay, that is accounts to be prepared in the books of consignor and consignee. So consignor will open 4 accounts. One is, that is see here, if it is consignor, then how many accounts he'll prepare? He'll prepare 4 accounts, that is consignment account, goods sent account, consignee's account and consignment stock account. So these are the 4 accounts that he prepares. And if it is consignor's account, then consignee's account, that is the agent in the books of agent, in the books of consignee, then he will prepare only one account, that is consignor's account. All right, so these are the different accounts that we need to prepare. That is, altogether we need to prepare four accounts. One is the consignment account, second is the goods sent account, okay, third is the consignee's account, that is Hubli Electronics account, and next is consignment stock account. This is in the books of consignor. And if it is in the books of consignee, you will prepare only one account, that is Phillips Company account, that is consignor's account. All right, so let's begin with the problem. I hope you have understood the question. I have solved the answer to some limit, because that will be a little time consuming if I solve the entire problem as and then. So that's how I try to solve the question to some extent, and the remaining half I will solve it right now. Okay, so prepare the books of accounts. Here, see, what does the question say? Prepare the necessary ledger accounts in the books of both the parties, that is the consignor as well as consignee. So let's first prepare the books of accounts in the case of consignor. So who is the consignor here? It is the Phillips Company. So in the books of Phillips Company, that is the consignor. How many accounts do we prepare in case of consignor? We prepare four accounts, that is consignment account, goods sent account, and then consignee's account and consignment stock account. So here I have prepared four accounts. First one is the consignment account, second is the goods sent account, okay, goods sent on consignment account, third is Hubli Electronics account, and fourth one is the consignment stock account. This is in case of consignor, okay, that is the owner. The next one is in the books of consignee. Okay, in consignee's account, that is Hubli Electronics is the consignee. Okay, in Hubli Electronics you will prepare only one account, that is the consignor's account, the owner's account. Okay, which is nothing but Phillips Company account. Clear? Let's begin with the solution. I hope you have you try to solve it accordingly. That is, you prepare the accounts and then try to post the entries, as in, that is, you can pause the video for some time, prepare the accounts, and then you start posting the entries. All right, before we start with the question, see that you have the notes been written in terms of journal entries, what I had given you in the previous class. That was journal entries in the books of consignor and journal entries in the books of consignee. This one. Okay, journal entries in the books of consignor and journal entries in the books of consignee. Okay, let's begin. Now here, Phillips Company, that is the owner, the consignor. Okay, Phillips Company consigned 200 pocket radios to Hubli Electronics, each costing rupees 400. Now this is nothing but goods sent. Okay, that is, the owner is sending 200 pocket radios to the consignee. Who is the consignee? Hubli Electronics. Okay, which is costing 400 rupees each. So what will be the entry if it is goods sent? For goods sent, we first look into the journal entries in the books of consignor, because we have first prepared the ledger of consignor. Okay, so let's look into the journal entries in the books of consignor. What is the journal entry for books? Journal entry for goods sent. Goods sent is nothing but consignment account debit to goods sent on consignment. Okay, consignment account debit to goods sent on consignment. So let's go to consignment account. Consignment account debit to goods sent on consignment. Okay, to the debit side, to goods sent on consignment. What will be the value? 200 into rupees 400. That is 200 pocket radios into rupees 400 2 into 4 is nothing but 8 and 80. The answer will be 80,000. Okay, so this is debited to the consignment account. The second effect has to be to the credit side of goods sent. Okay, so goods sent account has to be credited by consignment account, which is 80,000. This is nothing but goods sent. Okay, I'll just write here goods sent. Okay, next. Yes, the next thing is consigner paid. Consigner, this is nothing but the owner. Consigner paid rupees 1,400 for freight and carriage and insurance rupees 2,000 for sending the goods. Okay, so these are the expenses which are being incurred by the consigner. That is 1,400 and 2,000 rupees for carrying the goods and for sending the goods. Okay, so what are the entry for expenses? Look here, expenses incurred by the consigner. Okay, if there is expenses incurred by the consigner, then consignment account debit to cash. Okay, so consignment account is debited to cash. Okay, that is 1,400 for carriage and rupees 2,000 for insurance. So 1,400 plus 2,000 is nothing but 3,400. Okay, consignment account debit to cash. Next, for receiving an advance of rupees 20,000. Okay, if there is advance being received, then what is the entry for advance received? See, for advance received, cash or bank account debit to consignee's account. Okay, so cash or bank account is debited to consignee's account. Consignee's account means here. Okay, by cash. That is nothing but let me just go back here. I have the third entry, that is in case of expenses, consignment account debit to consignee's account. We have passed the entry over here, that is I'm sorry. So after expenses incurred, what is the next thing? That is and received an advance of rupees 20,000 by check against the consignment. So here it is the advance being received by the consigner. Okay, received an advance of rupees 20,000 by check against the consignment. So consigner has received an advance. So let's see what is the journal entry. Advance received. Okay, so what is the journal entry? Cash or bank account debit to consignee's account. So let's go to consignee's account. Consignee's account is here by cash. Okay, cash or bank account debit to consignee's account. So consignee's account will be credited by cash, that is in terms of advance received, which is 20,000. Clear? I hope you have understood this. By cash in the bracket advance, which is 20,000. All right. Next. Hubli Electronics incurred rupees 2,600 for octroi and carriage while taking delivery of the goods and spent rupees 800 for warehouse rent and 1,600 on advertisement. I'll repeat this once again. This is nothing but the expenses incurred by consignee. Okay, so what does this say? Hubli Electronics incurred rupees 2,600 for octroi and carriage while taking delivery of the goods and spent 800 on warehouse rent and 1,600 on advertisement. So these are the expenses incurred by Hubli Electronics, wherein 2,600 is for octroi, 800 is for warehouse rent, and 1600 is on advertisement. So if it is consignee who is making an expenses, then what will be the journal entry? Look here. For expenses paid by consignee, we are looking for the journal entries in the books of consignor. Okay. So for expenses made by or paid by the consignee. So what is the journal entry? Consignment account debit to consignee's account. Consignment account debit to consignee's account. So consignment account is debited to consignee's account. Consignee's account is nothing but Hubli Electronics. So octroi is how much? 2600. Warehouse rent is 800 and advertisement is 1600. Total of this is nothing but 5000. So consignment account debit to consignee's account. In consignee's account, the second effect will be in consignee's account by consignment account expenses 5000. I hope you have understood this. The second effect will be in the consignee's account, which is nothing but by consignment account expenses 5000. Clear? The first effect is over here in consignment account. First effect will be, I'll just take it a little more on top. Yes, this is the first effect. Consignment account debit to consignee's account, and second effect will be in consignee's account by consignment account expenses incurred, which is 5000. Total it out. Clear? Next. They also reported that they sold 160 pocket radios at rupees 600 each. So this is nothing but sales being made. And who has made the sales? The consignee. Okay, so they reported that they have sold 160 pocket radios at rupees 600 each. Okay, so they have sold sales. This is regarding sales. So what is the journal entry for sales? If it is, just a minute. If it is sales, then what is the journal entry for sale of goods by consignee? Then consignee's account debit to consignment account. Okay, so first we'll pass the other second half of the journal entry, that is for sales. It means it is to the consignment account is being credited and consignee's account is being debited. Consignee's account debit to consignment account. Okay, so pass the in consignment account to the credit side to Hubli Electronics in the bracket sales. What will be the amount of sales? They have sold how many units? 160 pocket radios at rupees 600 each. So 160 into 600 will give you 96,000. Okay. The second effect will be in Hubli Electronics to the debit side. So to Hubli Electronics to the debit side to consignment account 96,000. Clear? This is nothing but the amount of sales. I'll write it over here as sales. Okay. Next. Hubli Electronics are entitled for 5% commission on sales. Now they are entitled, that is the consignee, for selling the goods. They have got an commission of 5% on sales. So if it is commission on sale, then what do you do? Commission for commission payable to consignee. What is the journal entry here? Consignment account debit to consignee's account. Okay, when it is commission payable, then consignment account debit to consignee's account. So consignment account debit, that is to Hubli Electronics, consignee's account in the bracket commission. Commission, how much you are receiving? 5% on sale. 5% into how much is the sales amount? Here it is 96,000. So 5% of 96,000 is 4,800. Okay, consignment account debit to consignee's account. Consignee's account will be credited. Okay, by second effect, by consignment account in the bracket commission 4,800. Here it is. First effect is over here in consignment account. Second effect in consignee's account to the credit side. Clear? Now, is there any other journal entry to be passed in? No. We have passed the journal entries in the books of consignor. Similarly, we'll pass the journal entries in the books of consignee also. If you want, you can total of all these accounts. That is, you can total the consignor's account and then go for consignee's account. That is also fine. Okay, then we'll first close the accounts of consignor's account and then we go to consignee's account. We'll prepare the ledger account of consignees. Okay, so let's total out the we'll first start with totaling of consignment stock account. We'll first close this account. Okay, so to calculate the consignment stock, there's nothing information being given, so we need to calculate the consignment stock. In the problem, if you see, there is no information being given regarding consignment stock. We need to calculate it, and to calculate consignment stock we have learnt in the previous classes. If you see in this problem, there is nothing being given in terms of abnormal loss or normal loss or anything of that sort. So we need to check in as to what is the formula for calculating normal loss. I mean, if there is, look into these 4 steps. Okay, calculation of consignment stock when there is no loss of goods, when there is abnormal loss, abnormal gain, anything of that sort. There is nothing being given in terms of abnormal loss or abnormal loss in terms of goods transit. Nothing has been given in terms of normal and abnormal loss. So which kind of consignment stock we need to calculate? We need to calculate this one, the first one, that is when there is no loss of goods. Okay, so what is the formula for when there is no loss of goods? When there is no loss of goods, unsold units into cost price per unit plus non-recurring expenses divided by total units sent into unsold units. Okay, so let's put this in the solution. We need to calculate the consignment stock. So calculation of consignment stock. Okay, to calculate the consignment stock, put that formula what we just now learned. This formula, let's put that formula, that is consignment stock is equal to unsold units into cost price per unit plus non-recurring expenses by both consignor as well as consignee divided by total units sent multiplied by unsold units. Okay, so first one is unsold units. Unsold unit is 40. How it will be 40? That is 200 units were being consigned and out of 200 units 160 units are being sold. So 200 minus 160 will give you 40. This is nothing but unsold units. Okay, I hope you have understood how did we get this 40. That is 200 units which were being consigned. So 200 units minus 160 units which were being sold. So 200 minus 160 is nothing but 40. 40 into cost price per unit is 400 plus non-recurring expenses. Now which are the non-recurring expenses? Look into the question. You have written here, no? Non-recurring expenses, expenses incurred by consignor as well as consignee. It is over here, expenses incurred by consignor and expenses incurred by consignee. So here we need to calculate, we need to find out which are the recurring and which are the non-recurring expenses. So we need to know which are the non-recurring expenses being incurred by consignor as well as the consignee. These are the expenses incurred by the consignor and this is the expenses incurred by the consignee. Now non-recurring expenses, non-recurring means they don't occur again and again on that particular consignment. So freight is nothing but again non-recurring expenses. Insurance, why non-recurring? Because freight you don't pay once you have unloaded, you don't pay it again and again. So freight charges is only once, so this is non-recurring expenses. Okay, then insurance is again non-recurring. Once you make it, that is done, so it is non-recurring. Octroi is non-recurring. Expenses being made on octroi is nothing but non-recurring. Warehouse rent, this is not non-recurring, this is recurring. Why? Because you pay rent again and again. Okay, this product may be sold in one month, 2 months, anything. Okay, so it can be even a year. So rent you're paying again and again, but octroi freight insurance you don't pay it again and again. Okay, so warehouse rent is recurring expenses. Advertisement is also recurring expenses. You don't make it again and again. So warehouse rent and advertisement is recurring expenses, so which will be skipped off. Right, so recurring expense, non-recurring expenses is 1400, which is of octroi, then 2000, and then 2600 divided by unsold units is, I mean units, total units sent is 200, multiplied by unsold units is how much? Unsold unit is 40. Okay, so let's simplify it. That is 40, let's open the bracket first. Okay, before that we'll multiply this. 40 into 400 is nothing but 16,000 plus, open the bracket, 1400 plus 2000 plus 2600 divided by 200 will give you 30, multiply by 40 will give you 1200. I make a repeat, 40 into 400 will give you 16,000 plus 1400 plus 2000 plus 2600 divided by 200 will give you 30, multiply that 30 with 40, which is 1200. Okay, so let's simplify this. 16,000 plus 1200 will give you 17,200. This is nothing but the value of closing stock. Now, how do you evaluate the closing stock? What is the entry for it? Let's look into the journal entry for closing stock. Okay, now if it is closing stock, then the journal entry is for closing of goods sent on consignment. Goods sent on consignment account debit to trading account. So before this we need to, for closing, let's go to the consignment stock account. So here is the journal entry for closing of consignment stock account, that is for adjustment of consignment stock account. Then what is the journal entry? Consignment stock account debit to consignment account. So consignment stock account has been debited. So let's go to consignment stock account. Consignment stock account debit to consignment account. Consignment account. Okay, and what is the balance? How much will be the balance? 17,200. That is we had calculated just now. All right, so there is no entry which is to be passed over here. Let's go to see the consignment stock account debit to consignment account. Let's put the second half of the entry here, to in consignment account. It will be to consignment stock account. Okay, to consignment stock account, in the bracket amount is 17,200. Okay, now is there anything other entry which is to be passed in case of consignment account or any other entry? No. So let's first close the consignment account. What will be the balance of consignment? I think the debit side is more, so let's calculate the balance. Okay, so the credit side is more, which is 1,13,200, that is 96,000 plus 17,200 will give you 1,13,200. So write the total to both the sides, that is 1,13,200. Balance of 20,000, that is 1,13,200 minus 80,000 minus 3,400 minus 5,000 minus 4,800. Balance will be 20,000, which is nothing but profit. Okay, which is transferred to general profit and loss account. Okay, nothing but balancing, in the bracket balancing figure. Look into this entry, that is the accounts what we have prepared. See, consignment stock account, balance of consignment stock account is nothing but which is transferred to general profit and loss account. Okay, so balance of this is transferred to general profit and loss account, which is 20,000. Next, let's close the second account, which is consignment stock goods sent account. So let's close the consignment goods sent on consignment account. Credit side is more, which is 80,000. So 80,000, write down the balance to both the side, 80,000 as well as 80,000. To the debit side, the balance of 80,000 will represent what? Trading account. That is, we have written here. See, look into the pro forma what we have prepared. Okay, goods sent on consignment, balance of goods sent on consignment will represent what? Trading account. Okay, so balance of goods sent on consignment account, which is 80,000, is nothing but trading account, transfer to trading account. Next, the last one, the next one, that is Hubli Electronics account. This is nothing but the consignor's account, consignee's account. So the credit, I think the debit side is more. Let's total it out. So consignee's account balance is to the debit side, the debit side is more, which is 96,000. Write the balance to both the sides, which is 96,000. Balance of 66,200, which is to the credit side, that is 96,000 minus 20,000 minus 5,000 minus 4,800 will give you 66,200. So balance of the 66,200 will represent what? Let's look into the consignee's account. Okay, consignee's account, balance of consignee's account will represent what? By cash or bank. So write here as by cash or bank in the bracket balancing figure. Close the bracket. Clear? Next, the next account to be closed is the consignment stock account. So let's close the consignment stock account. I'll just take it to the next line. So when you close the consignment stock account, balance of that is 17,200. 17,200. Write the balance to both the sides, which is 17,200. To the credit side, 17,200. And what will this balance represent? Look into the pro forma what we have prepared. Consignment stock account, balance of consignment stock account will represent as by balance carried down. Okay, so write down here as by balance carried down in the bracket balancing figure, close the bracket. Next line, bring this balance to the next one, that is to balance carried down. Amount is 17,200. 17,200. Clear? All right. So there we complete with the consignor's account, that is books to be prepared in case of consignor's account. Let's prepare the next half of the entry, that is in terms of consignee's account. So this is the account which is to be prepared in case of the agent. Okay, that is in terms of consignee's account. In the books of consignee, that is Hubli Electronics. Here only one account will be prepared, that is Philips Company account. All right. So look into the journal entries in terms of Philips Company. Now let's look into how do we prepare the consignee's account. Now basically I have bought these journal entries over here, I have pasted over here so that it is easy for you people to understand. Okay, you need not write these journal entries, but I have just pasted just for your information, just to make you people understand. Okay, now here the first entry, that is journal entries in the books of consignee. Here you will, in case of consignee, you will prepare only one account, which is the consignor's account. Okay, this is Phillips company account. When you open this account, okay, the first entry is for goods received on consignment. Goods received on consignment, there is no entry. Okay, we have already received the goods, that is 200 units into 6 into 400. This amount will not come here because there is no entry for goods received on consignment. Next, for expenses incurred by consignor, there is no entry. For expenses incurred by consignee, now there are expenses being incurred by the consignee. Look here, if you go to consignment account, in case of consignor books, journal entries in the books of, that is ledger of consignor's account, there you can see to Hubli Electronics, this is the expenses incurred by the consignor, which is 5,000 rupees. Okay, so what is the journal entry to be passed in case of consignee's account? See, if it is for expenses paid by the consignee, in the books of consignee, for expenses paid by the consignee, consignor's account debit to cash or bank account. So consignor's account debit, okay, to cash or bank account, to cash expenses, which is 5,000 rupees. Okay, which what is the total of this five? How did we get this 5,000? That is 2,600 on octroi and carriage, 800 on go down rent or warehouse rent, and 1,600 on advertisement. So total will be 5,000. Okay, next, what is the next journal entry? For sale of goods received on consignment. Sale of goods, yes, there is sale of goods being done, which is 96,000. For sale of goods on consignment, what they have done is cash or bank account debit to consignor's account. Okay, so sale of goods, if there is sale of goods being done, then cash or bank account debit to consignor's account. So here, cash or bank account debit to consignor's account. So consignor's account will be credited by cash in the bracket sales, which is 96,000. Just refer the above accounts what we have prepared, you will understand it. Okay, 96,000. Next, for sale of goods received, then next is for advance paid by the consignor. Is there any advance paid by the consignor? Yes, there is advance being paid by the consignor. How much is the advance? What is the entry for it? If there is advance paid by the consignor is 20,000. So what is the journal entry for it? Advance paid by the consignor, consignor's account debit to cash or bank account. So let's go back to the consignor's account, to cash advance paid, which is 20,000. Cash or bank account, consignor's account is debited to cash in the bracket advance, which is 20,000. Next journal entry, after advance paid by the consignor, next for commission received by the received by consignee. Yes, there is commission received by the consignor. How much is the commission received? Commission received is 4,800. So what is the journal entry for it? If there is commission received by the consignor, then consignor's account debit to commission account. Consignor's account debit to commission account. Okay, so pass the entry. Consignor's account debited to cash or bank account in the bracket commission 4,800. This we have 4,800 we have already calculated, which is 5% on sales. 5% on sales is on 96,000. If you make 5% you will get 4,800. We have already calculated above. Okay, so to cash in the bracket commission 4,800. Next, What is the next journal entry? For return of goods, there is no return of goods being done in this question. For adjustment of bad debts, there are no bad debts being given. For final payment made by consignor, now this we will look in some time. For consignment stock account, there is no entry. Okay, so only this part is remaining, which will, wherein we need to, rest all transactions are being taken. So let's total down this account. Okay, what is the total here? Total is 96,000. 96,000. Credit side is more. 96,000. Balance of that is 96,000 minus 20,000 minus 5,000 minus 4,800 will give you 66,200. This is nothing but, okay, look here, balance of this, that is the to for final payment made by consignor's account debit to cash or bank. So here it will be consignor's account debit to cash or bank. So it will be to cash or bank, in the bracket balancing figure, close the bracket. I hope you have understood this. That is, balance of 66,200 is nothing but balancing figure, which is in terms of which is to be given in terms of cash, to cash to the consignor. Okay, so that's in terms of journal entries. I hope you have understood this question. Okay, first we need to pass the journal entries in the books of consignor. Okay, then we need to pass the journal entries in the books of consignee. You don't have to write these journal entries. I have pasted those journal entries here so that you understand the other half of the question, that is in terms of journal entries in the books of consignee. I hope you have understood it. Okay, first we pass the journal entries in the books of consignor by opening 4 accounts, that is consignment account, then goods sent account, then consignee's account, that is Hubli Electronics account, and the last one, that is consignment stock account. Okay, we also calculated consignment stock, pasted those entries. Okay, and then we total the account, and then we prepared the next account, that is the next ledger was in terms of uh, uh, in the books of consignee, that is Hubli Electronics. In case of consignees, in the books of consignee, you will open only one account, which is the consignor's account. Here the consignor is Philip Company account. Okay, and then pass the journal entry, pass the necessary entries as per the journal entries. Okay, so these were the journal entries. As per the journal entries, referring to these journal entries, we prepared the ledger of Philip Company account. Okay, I hope you have understood the problem, wherein we pass the journal entries in both, that is the consignor and where we have prepared the ledger of both consignor as well as the consignee. I hope you have understood the problem. We'll meet up in the next class. Thank you for today.